A little something about Raymond. He's an investor in stocks and rentals. He wants no money from you, no bait and switch, nothing. Here's what he's going to do. He's going to log into his personal account, share real estate property documents, and give you suggestions on what to read.
Good morning. Today is November 12th, 2020, and it is check-in time. We're going to log into my Fidelity account and check out my General Motors 401k and see where we are. See if we're up or down. And the market is going to be opening in about 15 minutes. So if you got your stocks ready, you can start buying at 9:30 Eastern Standard Time. But it's one thing that I try not to do. I typically don't buy as soon as the market opens because it's real jittery. And to me, you can really probably get a better buy or sell price if you just wait a couple of hours. So I try not to buy or sell first thing at 9:30. That's just something that I do. And you guys should just monitor that when you're new. Just jump into it and look at prices in the morning and then come back around noon and maybe come back again around 2 and just see how the prices are doing and make your own judgment when you want to do things. All right, we are in General Motors. We're all the way in, and my balance as of yesterday, November 11th, was $65,809.41. And my year-to-date is still in the red, negative 6.68. And it's getting pretty close to the end of the year. And I would love for that to turn green and be positive. But I don't know, but I'm not a quitter and I will not give up. And we will know what I'll do or what I can do together. So let's compare this to 2 weeks ago. So stocks and rentals, we're going to go to portfolio tracking. And we want to find the last General Motors update. So GM. And this was on October 28th. So this was 2 weeks from yesterday. And the value then was $63,106.49. We're up. So that's a good thing. We're up over $2,700, so $2,702.92. So that is passive income that I made in the last 2 weeks. And, you know how I do. I'm sleeping, I'm snoring, I'm hanging out. Not too much because of COVID, but I'm doing what I want to do, and I'm not sweating to make this money. So $2,700 in 2 weeks, that's pretty good. I am not complaining. And since we're here, I just want to do a recap on some things I discussed before, but I think it's always a good idea to revisit it, especially when you guys might be new, and to just really let it sink in. A lot of times if you hear something more than once, you can really grasp it or maybe catch on a second or third time. So this is my General Motors 401k, and I clicked on investments, and this is showing you guys all the investments that are in the GM 401k. So it's 27 investment choices. And here are the 3 that I'm in here. And you can see the, let's go to cumulative return. And we're going to do the same down here. And as you can see, here's my year-to-date. So the best fund for me would be this fund here, which is, I believe, a small mid-cap fund. Yep, mid-cap blend fund. So these are like smaller type of companies. And here are some of the companies that are listed here that this fund invests in. It's over or almost 2,500 different companies that this fund is invested in. And this is showing you the top 10 holdings. And I want to show you guys something that's really important. This is called expense ratio. And this is a fee that's charged for every $1,000 that I have in this particular fund. So they're charging me 20 cents for every $1,000 that's in this fund. And that's really good. The lower the number means that I get to keep most of my money that I invest in, and they're not charging me extra money just to be in this fund. So this is really low, 0.02%. That's super duper low. And again, I'm paying 20 cents for every $1,000 that I'm invested in this particular fund. So if we look at how much I have in this fund, which is almost 17,000, they're charging me 20 cents for every $1,000. So you can do the math. 20 cents times, let's round up to 17,000, whatever that is. That's what they're charging me, and that's a charge per year, not per day or per month, but per year. And let's go down and look at some year-to-dates, because I actually don't have the best performing fund. So if we scroll down and look at some other choices that I could have made but I didn't, you're going to see higher numbers for year-to-date. So this is the year-to-date column right here, YTD. We just want to stay in this column and go down. And you know what? Let me make this screen bigger for you guys, because I don't want any complaints. So you're making the videos and we can't see it. So again, we're in this year-to-date column, and we're going to scroll down, and we're going to look at some really big numbers. And I wish I was invested in these funds, but I didn't pick them. But if you guys are a GM 401k holder, you guys can pick them. So here are two funds. This one year to date is over 26%, and this year to date is almost 54%. Again, I am not in these two funds, but you guys can pick them, or I could have picked them. So let's click on this link here and see what the fund is about. So this is similar to what I clicked on for the fund that I just showed you guys. And I want to show you something. This one has a higher expense ratio. This is 0.35%. The one fund that I showed you that I'm invested in was 0.02%. So this one is saying for every $1,000 that you would invest in this particular fund, they're going to charge you $3.50. I'm paying in the fund that I just showed you 20 cents for every 1,000. But I guess the trade-off for this particular fund, you'll be making more money because they have a higher year-to-date income that they're making. And I want to point this out. Why are you paying more for this particular fund, which is 0.35%? It is a managed fund. So if we scroll down, again, here are the top 10 holdings, and you can compare it to the top 10 holdings that I had in my fund. But if you scroll down, this fund is actually managed. So there's a guy, his name is William Dandorf. It's probably Dandorf. And he manages this fund. It's telling you when he started managing, and it gives you his education. You can click on all this stuff. But you're paying more because they actually have a dedicated person to manage this fund. So this is a managed fund. Let's look at the other one that's really high. So that was the 26%. Let's look at the almost 54%. And as you can see here, it says active core funds. Active core, another word to say they have a dedicated person to manage these funds. So let's look at this one. And check out the year to date. I mean, he's killing it. And let's look at the expense ratio. It's a lot higher than the one I chose. Again, this is $3.50 per $1,000 you have invested. And here are the top holdings, top 10. And he has a total of 481 holdings in this fund. And again, this is the top 10. And this is this guy, he's Stephen Weimer. So again, they have a dedicated person managing this fund. And if you want that dedicated person, you're going to pay more in fees. So that's the difference. You get this higher number and you're going to pay a lot more in fees versus the ones that I am invested in. I like to choose low expense ratios because if you Google managed funds versus non-managed funds, you pretty much see that they're typically, you're going to get the same year-to-date profit. This particular year, that's not true for these two funds. But just to prove my point, here's another managed fund. And year to date, they're actually negative 9.65. And I'm pretty sure they have a dedicated person managing this fund. So let's see. So that's that negative number I just mentioned, negative 9.65. This has an expense ratio of 0.292, so you're going to pay $2.92 per 1,000. And here are the top 10 holdings, total of 170. And this guy, I'm just going to say his first name, Joseph. So Joseph is managing this fund, and he's not doing well. He's actually negative. So again, you can pay that higher expense ratio fee. You can get a dedicated person managing a fund, but that doesn't mean that they're going to do well. These two guys this year are doing well. I guess if I wanted to start clicking on stuff, I can look at the historical values of the funds that they've been managing over the years, and I'm pretty sure they're not, hitting it out the park every time. But just to let you know, this is how that works. You can have a managed fund or a non-managed fund. I pretty much never pick a managed fund. And again, as you guys follow me, we'll be, continue to log into my account. So we'll look at the managed funds versus non-managed funds, and we'll look at the numbers. And if the numbers always are higher, you can kind of do the math and say, is it worth me taking a higher fee but get more profit, or being where I am? These check marks, these are the funds that I'm in. So year to date, 6.34, 15.41 for that one, and 12.32 for this one. And these are pretty much right above average. So the average stock return per year, if you Google that, is pretty much about 10%. So that's taking the good years and the bad years, but the average is about 10%. And if you're doing average, that's really good, because a lot of people are in the market, they're negative like this guy is. And if you're above average, that's really well. So two of my funds that I have for the year are above average, 12.32%. This one is at 15.41%. And this one is below average, but I'm not negative. So I'm pretty happy. And plus, this one is not really a stock fund. This is more bonds. So just to show you guys. So expense ratio, really low, 0.029, 29 cents per $1,000 in this fund. And it's going to tell us what we're invested in. And these are pretty much bonds, so U.S. Treasury notes. These are the top 10. And it has over 13,000 holdings, and they're just showing you the top 10. All right, guys. Hopefully, you guys are getting this. This is pretty much a lesson on expense ratio. And again, we are in my General Motors 401k, and this applies to all, at least Fidelity 401ks. So you don't have to be with General Motors. I also have a GE 401k. You don't have to be with GE. I know AT&T, they use Fidelity, and I've actually had a friend that let me, well, she didn't let me log into her account, but she logged into her account while I was there, and I was able to look at it, and it's the exact same setup. I mean, they just have different investments from the other companies. All right. Hopefully you guys appreciate this. Stocksandrentals.com. Please come here, check me out, make comments, tell me what you like, what you don't like. If you got ideals, anything you want me to talk about, you can post them here. I come to this site daily, and I will respond to post. And if it's a good suggestion, I will make a video or try to talk about it by writing a article. All right, I will holler at everybody. Peace.